who knows, whatever time frame it is, whatever time zone it is where you're at. Hope you're doing well. It is Sunday, like the 6th of October, 2024. And the only reason I mention the date is to remind you, if you're watching this in the future, about what uh, reference point in time we are at, as it's relevant to what I'm about to talk about, which is the current state of the Bitcoin market and the crypto market. Um, right now, we're seeing Bitcoin playing out the VEPs very nicely, as it has been continuously for years. And the reason that is because it's moving according to the VEPs, which is again volatility, entropy, probability, and statistics. Right, the VEPs. If you know what the VEPs are, then you know the assets move by them, and you can see that very nicely in this past week that we've had. The nice move down on Monday, the nice move back up on Thursday, and then a bit on Friday, and then kind of evened out yesterday just by kind of going a bit what people call sideways, but it was full of hills on the low time frames if you're looking, and then ended up a little bit flat-ish, but for the day, but basically a very good day for scalping if you had the opportunity. And today looks set up for another day like that. Basically, it's wound up for more scalping before the traditional markets, like the CMEs, open later today on Sunday. And then, of course, tomorrow when the traditional markets return in full force at 9:30 a.m. U.S. Eastern Time. What is the Bitcoin looking like for the end of the week? Well, it's looking like basically so far this week, it has played out pretty much what I indicated was a high probability of happening in the first week of October. Right? That we would see some downward action in October. At the start of it, that was very high probability that, yes, it could go up, but it was more likely to go down. Well, we've seen the more likely side play out, which is why, as a VEP trader, I trade with the probabilities and not against them, right? So if you were betting against the probabilities this week and you were longing because your favorite YouTube monkey told you, well, it's October, it's going to go up. Okay, they also said September would go down. Well, September went down in the beginning, but then bounced back up very hard. Now, that might happen again in October, but first of all, those who said that about September were wrong, right? And those who are saying, oh, October has to go up, could also statistically be wrong, right? That could be what they call the October surprise, right? Could end up to the downside. That doesn't have to, but it could. Right now, the probabilities are that at least until around the middle of this week, maybe the end of this week, maybe into next week, but at least until the end of, in the middle or so of this week, it's very probable that we'll continue to see price action going down or sideways. Now, there are some indications that it is going to turn around even this week, even as early as today or tomorrow, but that's why we read from high time frames to low time frames. We do our workflow. We look at each time frame that's relevant, and then as we work our way down, we get into the time frames of the intraday trading, like 15-minute and under. That's where we actually pay attention to the continually changing information, right? It's high time frames, yeah, it's great and wonderful. It gives you a good big picture, but lower time frames indicate to you what's actually happening right now. So if you want to scalp or take trades during the day, it's important to look at those lower time frames to have an idea of what's actually going on the 15-minute and under. Because anything above that, you're starting to get into some pretty high time frames. Anything above an hour, you might not have even a move in a day, right? You might have a move every several days or something. Depends on the asset, right? Yes, technically you can trade any candle, but um, you might not have a great setup for a move. Let's just put it that way, on a higher time frame than an hour or higher in a day, because it can take a while, right? If you look at the super low time frames, you'll see. Let's say you're trading the 1 minute time frame, okay, which isn't even technically super low, but listen, it's very low, right? The 1 minute time frame is plenty fast for a human being to trade. Shouldn't have to trade more than that, but you can. And if you look at the 1 minute, you'll see it's not every candle that there's a perfect setup to trade, right? You want to wait for those setups. You want to wait for the no-brainers. Take those. Wait for the volatilities to all be contracted, and for the correlations to all be contracted. And then when they have nothing left to do but expand, then long, right? As long as your ALR is fully depleted and has nowhere else to go but up, right? And as long as your AVQ is on the bottom heading up, and you got confluence across three major indicators, primary indicators, boom, there you go. You go to the upside. Or if they're all on the upside, and they're gonna they're gonna contract, or one of them's gonna contract, the other one's gonna stay high, and so it's all gonna come down, very obviously, right? So again, read it according to the cheat sheet of volatility, which happens to work with entropy too, and then you can know which way to actually expect the price action to actually go, and you can see for yourself that it will or it won't, and the vast overwhelming majority of the time it will, because that's what price action does. It will follow the returns, and the standard deviation of returns plus correlation give you direction, right? And the laser returns are the returns, so they'll tell you which way the returns are going, and that'll indicate to you also which way the price action is likely to follow. And the AVQ is likely to tell you whether or not the volatility quality is increasing or decreasing, and whether or not you should be longing or shorting, right? When it crosses above or below the MA, or when it's at an outlier and flips around. So that's just your volatility starter pack of indicators, right? So you do that with the volatility starter pack of indicators, and you got plenty of power right there that you can use to trade. And overall, that gives you a quantitative edge, measurable edge, right, over traditional voodoo TA, right? Because you're not counting on basically lagging information, which is what that stuff is made up of, right? If you look at an SMA or an EMA or Fibonacci, or any of those things, right? Even things like an order box or channels or flags or any of those things, right? M patterns and W patterns. What are all those things? They're all information based on price. They're based on price. They're not correlated to past price action. They're based on price. Okay? They're not based on returns. They're not based on the mean of returns. They're not based on the standard deviation of returns. They're not based on entropy, like proper entropy, right? So if you have all these things that are just based on price, well, of course it's going to be wrong most of the time, which Voodoo TA is. And people who teach how to use it, people who sell you on how to use it, because they're not really teaching you anything. If I'm teaching you a bunch of garbage, I'm not really teaching you anything, right? The people who say they're teaching, who are really just selling you garbage, if they themselves tell you, this tool works 30% of the time, it's reliable 30% of the time, well, that means it's not reliable. Even if it's reliable, quote unquote, 70% of the time, that's really not reliable. Okay? If 1 out of 3 times you need to doubt whether or not that thing's going to work, it's not reliable. Because that means 1 time you can count on it, the other 2 you can't. Or 2 times you can count on it, the other 1 you can't. Out of every 3 times, 1 of those times you're not sure. And which one of those times are you not sure? You don't know. Which means you can't rely on it, because a full third of the time it's not reliable, and you don't know which one of the 3 times that is. Right? So that makes anything that's not, you know, incredibly close to 100% reliable basically useless. If you look at probabilities, right? If it's not reliable, quote unquote, at least, 95% of the time or more, then it's not reliable. And it should really be reliable 99% of the time or more to be even considered, honestly. Which is why leading information is what we use at Alpha Trading, because leading information does tend to be correct at least 99% of the time or more. The question is, do you do with that information what it's actually saying in the moment that it's saying it? And then when you're trading in very low time frames, you have to keep in mind that information changes quickly. So that means that you also have to change your trading strategy, your trading, whatever you want to call it, tactics quickly. Right? For a very simple reason: the information, the real-time information, is changing. It's not staying static. Brings me to the next topic: the last year of war. Right? What do I mean by that? Well, for the last year, there's been war in some places. Well, it turns out there's war every year, unfortunately. We're still that way around the world. Right? Many conflicts around the world. Some are new, some are old. Some are kind of in between. And one of the older ones, right, the war in the Middle East, has really been going on forever on a Wednesday, like for ages and ages. We're talking many generations. And there's been conflict in this part of the world for thousands of years, right? Nothing new. The only difference is that in the last year, there's been some new elements added to the mix that have really changed up a lot of the ways it is going, changed how it's being managed on both sides, or on the one side that was first attacked a year ago, Israel, and all the other sides that it was attacked by that are now also having to deal with the consequences of their actions. And how does this relate to Bitcoin? Well, it does actually, because you often hear people say Bitcoin disincentivizes violence. Okay, in some ways, there's an arguable case for that, but definitely not in all ways. Like, absolutely not in all ways. I mean, there is absolutely a case where Bitcoin does not disincentivize violence at all, and in fact maintains it, and does not improve the situation about violence in the world. I wish that it would in all cases, but it does not. Right? There is a case where Bitcoin continues to see violence in the world, and that's a shame. But that's also just a reality, right? In a utopian system, yay, wonderful! People have money and people have Bitcoin, and there's no need for violence because everyone's happy, yay. But in a reality system, actually, there's a lot of violence in the world, and people need to realize that and work within that reality, because it's just an unavoidable truth. So, anyway, hopefully we will see better times ahead, and we will see the world has more peace, less violence, and more people spending their time trading in positive ways as opposed to negative ways. So right now, there's been a whole lot of negative trading, right? Trading kinetic energy in a bad way. We don't want that. So on that note, folks, happy trading, happy Bitcoining, and peace be unto everyone. See ya.